Good evening to you all and good morning to our overseas speakers. On behalf of the Asian Institute of International Financial Law, IFAL, I'd like to extend our warmest welcome for you to join a special cross-center event titled Protecting Policyholders' Interests in Health Insurance. Today's event is co-organized by the Center for Medical Ethics and Law, CMEL, and the IFAL. Both are research centers housed at the Faculty of Law of the University of Hong Kong. My name is Emily Lee. I'm the director of the IFAL. My co-host today is Dr. Kelvin Ho, who is the co-director of the CMEL. To provide some common ground on issues addressed by today's three speakers, we were drawn to a recent International Association of Insurance Supervisors, IAIS newsletter, in which the international insurance regulator has set their priorities against the backdrops of COVID-19 policy frameworks, InsurTech, information technology policy, inclusion, and health insurance, among other issues such as climate risk. From our vantage point, the three presentations today not only reflect the spirit of the IAS rules on the protection of policyholders, but also enhance the understanding of the international development in health insurance. Put alternatively, the three presentations bear striking resemblance to those priorities identified by the IAIS. Furthermore, the priorities of the IAIS overlap with the Hong Kong Insurance Authority's statutory functions, which are A, facilitate the sustainable market development of the insurance industry, B, protection of existing and potential policyholders, and C, promote the understanding by policyholders and potential policyholders of insurance products and the insurance industry. The first speaker, Mr. Chong from the Hong Kong Insurance Authority, IA, will talk about how the IA has been doing to promote the social role of insurance, to close protection gaps and lessen the burden of Hong Kong's social welfare and public health systems. He will also shed light on the IA's major initiatives to enhance financial inclusiveness through product innovation, public empowerment, and insurance literacy tracking. The second speaker, Professor Wagner from Harvard Medical School, will discuss the roles and responsibilities of a health insurer with respect to new, highly priced medicines in health systems, using new cancer drugs in the US as an example. Coincidentally, in the IAIS newsletter mentioned above, it also identified the role of private and voluntary health insurance in strengthening financial protection in health, as well as the role of private sector innovation and that of regulators and development practitioners in ensuring that the corresponding products offer value and are complementary with compulsory public systems. Dr. Rees from the World Health Organization, WHO, will provide his insights on the importance of achieving universal health coverage, which is adopted by the 194 member states of the World Health Assembly as a strategic priority. This WHO initiative will likely further contribute to the promotion by the IAIS of access to insurance, given that the Access to Insurance Initiative, A2II, and the IAIS has formed a unique global partnership which inspires and supports insurance supervisors in promoting access to insurance for underserved and low-income populations. A2II is the IAIS implementation partner on financial inclusion. The rundown of today's event is as follows. After the introduction, the three speakers will each give a presentation for about 20 minutes, which will be ensued by the Q&A session. We understand that during her presentation, Professor Wagner may conduct a simple audience poll. The poll will be anonymous and is a means of getting participants involved. Without further ado, we'll now proceed to present our three very distinguished speakers. My co-host and I will take turns to formally introduce the speakers. It is indeed an honor and a privilege for us to host them. Mr. Clement John will be our first speaker today. Mr. John has been serving as Chief Executive Officer of the Hong Kong Insurance Authority since August 2018, after retiring from the administrative service. Senior governmental positions that he took up include Commissioner of Insurance from 2006 to 2009, Postmaster General from 2009 to 2011, Commissioner of Customs and Excise from 2011 to 2015, and political appointment as the Secretary for the Civil Service from 2015 to 2017. At the regional level, Mr. John is Chairman of the Asian Forum of Insurance Regulators. He is also Chairman of the Audit and Risk Committee and a member of the Executive Committee of the IAIS. I'll now pass the floor to Dr. Ho, and he will introduce two other speakers today. Over to you, Calvin.
Thank you so much, Professor Lee. Well, the Center for Medical Ethics and Law is an interdisciplinary center, so set up about a decade ago, and we're delighted to be able to partner IFL, which is headed by, of course, Professor Emily Lee. Before I introduce, of course, the other two speakers, I'd like to take this opportunity, of course, to thank my very gracious partner, Professor Lee, for having been a wonderful collaborator. She has single-handedly managed this event. As you can see, bringing together very different domains and essentially related healthcare with finance. So one would think perhaps what might be the link between the two, but she managed that. So it has been a great learning experience for me. So thank you so much, Professor Lee, for this wonderful opportunity, and well, certainly in working with yourself and your wonderful center. I'd also like to take this opportunity, of course, to thank our other very important colleague, and that, of course, is Miss Flora Leong. So she has done all the back-end work in getting this event together. So thank you so much, Flora, for the great diligence. And I think all the speakers can attest to that in terms of the many rounds of interaction with her. So thank you so much, Flora. And of course, my center's manager as well, Ms. Jane All, that has helped to publicize the event, not only to members of HKU, but also beyond. So thank you so much, Jane, for that. Finally, I'd like to thank Ms. Jo Sung and also Ms. Jessica Yong from Mr. Jung's office. They have also supported the event. So thank you so much, Jo and Jessica. So, well, in terms of the other two speakers, Emily has already very kindly introduced them in terms of their affiliation. So Professor Anita Wagner has done some very important work in health insurance, not only in the US, actually, of course, she's just talking about the US today, but she has done a lot of work just across the border from us on mainland China. So she's, in fact, an expert in the insurance system there as well. And I don't mean this is just exaggeration. You can see from her publications and the many students that she has had, and fellows as well, having come from this part of the world. So so if you do have any questions at all, you're very welcome to engage with Professor Wagner. And following Professor Wagner is Dr. Andreas Reis from the World Health Organization. So Dr. Reis, you see from his impressive CV, he has been responsible for some of the most important documents on the ethics front, health policy and ethics on a range of very important topics. Of course, he's just going to speak with us on two particular aspects of WHO's policies, both very important, as Professor Lee has mentioned, universal health coverage being one of them, and of course, also in relation to a more recent guidance document on the use of medical AI or artificial intelligence, a particular aspect that is very pertinent and of great interest to many in this part of the world. So that said, I'd like to take this opportunity finally to thank all of our three wonderful speakers, and it's a great privilege to start with Mr. Cheong's presentation on the situation here in Hong Kong. Thank you so much.
Okay, so thank you, Dr. Ho, and thank you, Professor Lee. And also through you to IVO and CMEL for having me. We actually orchestrated this particular presentation some months ago, and we were, in fact, a little bit overwhelmed at the very beginning because, first of all, it's a very, very important topic. It's a topic which carries a lot of impact, not just in Hong Kong, but also globally. And to be frank, this is a topic on which we have not done, I believe, the bulk of the work that we want to do. So at that topic is a topic that we believe is still a work in progress. So that is the first reason why we feel that by accepting this is a challenge. And secondly, of course, is to put me alongside such eminent speakers. So my short advice to everybody who is listening is that first, I'm not here just to give a lecture. I'm here to receiving one. So I have never regarded myself as a good student, not least a scholar. But I always learn through alternative and practical means. And I think today, by contributing, I hope I'm going to take back more than I give. So in that spirit, I will begin my presentation. I will share my screen. Okay, so I will start with the first one, which is the statutory functions of the insurance authority. Can you all see the slides?
Yes.
Okay.
Yes.
Now,
Mr. Cheong, you might want to set it to presentation mode.
Okay, good. Right.
Okay, yeah, that's clear now. Thank you.
Now, so I risk repeating what Emily said just now, but here we are. Just as background, the Insurance Authority is a new organization, but it's a bit of a no one new, because we actually was created in 2017 to take over a previous governmental organization, which, if you notice what Professor Lee mentioned, was the Commissioner's Insurance Office, in which I worked for a couple of years. This setup makes it an independent statutory organization, but at the same time, it created a couple of new functions. And I've highlighted three orange boxes, which I think are pertinent to today's presentation, which include protection of policyholder. I think that's bread and butter for all regulators. But at the same time, we have the responsibility to do public education and for achieving sustainable market development. Now, this particular layout, to some, is actually tricky. I have been told many times that these objectives are incoherent. Some actually said it's downright conflicting. A lot of people told me that by safeguarding policyholders, you will never be able to invigorate a market development, let alone trying to promote competitiveness. So they simply will not gel. I will leave it till the last slide, in fact, the second last slide, to let you know why this might not always be the case. Now, back to this particular pyramid, should not be unfamiliar to people in Hong Kong. This is where we're heading. We have an aging population, and the speed of which we're aging is quite phenomenal. We are an affluent society. We are a premier global trading hub. But at the same time, this particular trend will create certain issues that we have to handle. Just to give you some figures to chew on, in 2019, like 3 years ago, the percentage of population over the age of 65 is about 18%. That comes to about 1.3 million. In 20 years, which is like 17 years from now, 20 years from that estimate was produced, it's going to reach 2.5 million. That means it's round about double. And the percentage will reach 33%, about 1/3. And finally, if you move it on for another 30 years, which is like 27 years from now to 2069, that volume of population, in fact, is more or less the same. It's like 2.58, a marginal increase. But interestingly, the percentage increased another 5% to about 38. Now, that tells you that we are not just aging, we are also not producing enough young people. And that's why you see the pyramid is slimming in the waist. Now, this creates issues because it creates issues in terms of volume of care that people need, also create issue about financial means to support them. This is where we are, and I think I belong to one of those roles. Now, to just add on to what I said, the trend itself is actually accelerating. For some mysterious reason, I can't really tell why, Hong Kong people live longest in the world. In 2069, which is on the right side of the slide, the guys living in this polluted city under, I think, merciless, hectic pace will have an average life expectancy of 88 years old. And the ladies will outlive them by another 5.5 years at the age of 94. So instead of relying on a social security system, which is by default designed for the underprivileged, it is very important for the mass public in Hong Kong to get serious about retirement planning at a relatively young age, so that their savings could be amassed and turned into a stable income stream when they reach the age where they need that particular supplement. For those who are living longer, but yet at the same time suffering from chronic illness, an inflating medical bill injects another additional stress. And you can see in the next couple of slides, the public sector in terms of provision of medical services is congested, it is inundated. Despite we have a lot of laudable policy pledges, I think we still have a lot of ground to cover before we could actually reach that particular goal. And in that context, insurance, if executed correctly, can do two things. First, it can institute disciplined saving. In fact, it's a way of enforced savings. It's a sort of habitual saving. And also it is a tool, as many would already know, of pooling and mitigating risks. Now, turning on to well, I'm losing one of the slides. Hold on. Let me check. I'm sorry, hold on. But let me focus on this slide then. In terms of the financial sustainability of the healthcare system, there are a couple of interrelated factors. I've listed out 6 here, which are all relevant. And I'll give some perhaps description on the type of considerations relevant to these factors. Now, I'll start from the top. Aging population is definitely going to be a cost driver. So it's going to be, I think, important because it's going to affect how much we're going to pay. If you look at the bottom, economic growth it is important because that's how you support the system. But if you look around in the last couple of years, geopolitics is actually making investment environment extremely volatile. So economic growth is not guaranteed, and this is an issue. Now, if you look the other 4 boxes, we have public expectation, which is bound to go up. And we have issues in Hong Kong regarding whether we should continue, we could continue to maintain a simple and low tax base, because that is how we relied upon to be competitive. But this also is a constraint. Now, the other 2 boxes are interesting. The other 2 boxes are the one that I think the audience will be looking into in the other presentations that my fellow speakers are going to talk about. In terms of medical advances, Professor Wagner is going to talk about cancer drugs, but the issue here is assessment. How do we assess the adoption and the way of payment for advanced medical technologies and pharmaceuticals? And on the left-hand side, in terms of cost escalation, the issue here is really about how do we introduce regulatory regimes, and insurance could be a part of it. And also, how do we address the issue of shortage of medical manpower, or which again will be a cost driver for the system. Now, I move on to the trend of healthcare expenditure. In Hong Kong's case, like many other jurisdictions, we have in fact a very strong growth over the years. Demand of healthcare is going to rise exponentially because of population growth, organic growth, medical inflation, and increased number of elderly people. In terms of public health expenditure in Hong Kong, comes to about $189 billion, and that's about like 24 billion US dollars. And it is actually growing at a rate which is faster than GDP. Over the last 30 years, medical expenditure has been growing at the rate of 5.6% against the GDP growth rate of 3.4%, which means medical expenditure is growing at about twice, well, not twice, about 60 to 65% above GDP growth. As a result, the share of the healthcare expenditure in terms of the total spending, in terms of GDP, has also grown consistently. It grew from 1989 from about 3.6% to now about 7%. So basically, as a whole, we are seeing a very, very consistent growth, and this growth is actually eating into the total amount of production that we created as an economy. Now, going back to the issue about how these expenditure are actually expressed. I've said earlier that there is a very, very strong growth in terms of expenditure against GDP, but in terms of the spread in Hong Kong, it's very similar to Singapore. I think it's basically because our society, the fabrics are very similar. So we are dual track. So we run 50-50 in Hong Kong. But if you observe, in Hong Kong's case, we have a shortage of doctors. In terms of doctor to population ratio, we are actually running short. So, but the question that I pose to you in the next slide is, how would this 50-50 translate into service provision? That's the first thing. And secondly, how would this limited supply of doctors be divided between the public and the private sector? Now, just remember what you saw in the last slide. And if you look at this slide, you realize that the 50-50 in fact translate into a case of 90-10. In terms of the actual service provision, and many will know that in terms of medical expenditure, inpatient services, in fact, are the most expensive. In terms of inpatient services in the year 2020, public sector takes up 90%. So 50-50s will end up being carved off and put into the two sectors, but with the public sector providing the bulk of the complicated and more expensive level of care. Now, in terms of doctors, I can honestly also tell you, because of the kind of financing model that we have, we are not surprised to see doctors more inclined to serve in the private sector. So as a result, we spend a lot of money, we do it on a dual track, but at the same time, the public sector is actually having a serious congestion and inundation, as I alluded to earlier. Now, just to illustrate the kind of situation we're in. Now, this is the waiting time for specialist outpatient and in certain inpatient services. You can see on the left the waiting time, and you can see there are on the right column there are 5 out of 8 specialties where you've got 3 figures waiting time. That means it is more than 2 years. Even from the median, you can see there is at least one which has the 3 figures. Now, to be honest, this is not very acceptable. If you again look at the waiting time for elective surgeries, it is again very long. And in certain cases, you're talking about years rather than months. Now, what is causing that? The table at the bottom will tell you a little bit of the reason. If you look at it in context, the average household size in Hong Kong is about 2.7 people, and the expenditure, the household income is about $28,000. If you look at it in the context of private sector fees, hospital care per episode, you're talking about, in a nutshell, a potential payment of income of 2 months to 8 months. That doesn't actually need a rocket scientist to tell you that created a lot of incentive not to go into the private sector. And if we look at the difference of fees that the public sector is charging, the bulk of the demand are drifting into the public sector. Now, in terms of the government's policy, there is a very clear objective. I think it gels very well to the WHO mission. Instead, nobody should be deprived of adequate healthcare because of lack of means. It's basically universal suffrage. And in that context, there are 4 priorities. I won't elaborate on them here. It was very clear that we are there to cater for serious cases. We're here to cater for the vulnerable. So we're here to cater for the chronic illnesses, and this is the priorities. Over the years, in fact, there are a lot of policy reforms being done by the government, and I won't repeat them here in the interest of time. But for Professor Wagner's case, in fact, there is one interesting report done by Harvard, a team from Harvard in 1993. But in a nutshell, the last 3, done in 2008, 2010, and 2014, will lead to the next topic I talk about, which is the voluntary health insurance scheme. We realize that one of the reasons why people actually don't want to go into a public hospital is because they feel it's not affordable. And in order to do that, they want certainty of the ability to pay, and they want transparency. Now, I won't actually repeat all these things that we have put on the screen, but these are the key attributes of the voluntary health insurance scheme. It's a regulated product. All these things are provided to assure the patients, the policyholders, that they will be able to get the amount of care that they need. And in fact, all these are things that we believe that most of the average people will be craving for. Now, we put that out in 2019, and 2 years after its inception, we only have record up to March last year. We have sold close to 800,000 of these kind of policies, and most of them are actually sold to people who are young, 53% below 40, and another about 30% below 30. So we're selling to the people at the right age when they are still paying relatively low cost to insure themselves. And then in terms of payout, it created a very good kind of payout ratio. 94% of claims are paid with an average reimbursement rate of close to 90%. So you're not just buying insurance, you're getting paid. So this particular product, I would dare to say, is a success. And people are using this product to access non-emergency services where there's a long waiting time in the public sector, and also certain selective kind of inpatient expenditure. Inpatient consultations. Now, in terms of voluntary practices, the insurance industry has also done some. There is the insurance authority has promulgated GL31, which actually set out a number of issues regarding fair treatment of customers. I won't repeat them in the interest of time again. And in terms of the industry itself, it has also in year 2020 provided 2 best practices, one to standardize and simplify questionnaires for underwriting medical policies, and the other one on the use of genetic testing. These are the things that we've done in the last few years since the establishment of the insurance authority. Now, in terms of the limited impact of insurance, I think these are some of the factors that were highlighted. Again, I won't elaborate them, but if you just look at the kind of things that we have, on the first 3 is really about education, and the fourth one is the BHIS will address them, and the final 3, in fact, is government policy that we need to tackle later on. Now, in terms of product innovation, I know I'm running out of time, Emily, but please bear with me for a few minutes. I just want to give people the idea of what we've done. In terms of living longer, in terms of retirement, we actually introduced a product called Qualified Deferred Annuity product. This kind of product is a tax-deductible product that allows people to invest into annuities. Now, we provided a modest tax incentive, but it created huge results. We introduced it in February. We introduced it 3 years ago, and up to February this year, we have sold, I believe, on around $15 billion worth of these products. And most of the people who bought it was around 48 years old, and they are buying it way above the amount on which they can claim tax benefit. So there's a huge demand there. So a regulated product, not just work in the health space, it also work in the retirement space. Now, the question mark we have is that after the VHIS, the Voluntary Health Insurance Scheme, is there a product that we can actually use to stimulate more demand? In the retirement space, we are already thinking about this, and we have just introduced a new product called Protection Link Plan, which in fact allows people actually to expose themselves to the equity market with a decent protection, which actually dovetail with the QDAP, the Qualified Deferred Annuity Plan, so that people have a kind of value chain on which they can do retirement planning. Now, in terms of, I'll run through the rest of the slide because I'm running out of time. We also have statutory mission to do public education, and we believe that insurance literacy is the key. We have launched this year for the first time a public education campaign that comprises 3 different elements. One is the gap study, then we have the insurance need calculator, thematic sitelet, and also tracking survey. In terms of the calculator, we call it the assessment tool. We have 2 versions that allow people to browse or to sort of have deep dive, and they have 7 stages where people can use very conveniently to gauge their own protection needs. Now, if they have obtained their protection requirements, they are free to browse a thematic sitelet where they have mainstream insurance product, main functions, and main features to allow them to learn more. So it's a kind of education messages. And finally, we do a feedback loop. We do a literacy survey. This is the first ever done in Hong Kong. We just completed the first cut. We're going to do a rolling survey every 3 years, not just to gauge whether we're doing the right things, but also to inform us the direction of future strategies. Now, this is the final slide, which I promised you at the beginning. People say that as a regulator, you cannot promote market competitiveness, you cannot facilitate business. We believe that it's a question of balancing. By allowing people to learn more, to be more aware, to promote inclusiveness and protection, we in fact can create a better market environment where the industry can thrive. So it's like riding a bike. You just have to make sure that you do a right balance. You go through the right direction, and we could all be winners. Thank you, Emily. Sorry for missing your time limit.
Okay, well, thank you so much, Mr. Cheong, for sharing with us such wonderful insights and impressive developments in Hong Kong. For our next speaker, Emily, do I proceed to introduce Anita?
Yes, please.
Thanks so much. So I'm delighted to introduce our second speaker, Professor Anita Wagner. She's a faculty member of Harvard Medical School and Harvard Pilgrim Healthcare Institute. She's also the co-director of the Center for Cancer Policy and Program Evaluation, as well as the co-director of the Harvard Medical School Fellowship in Health Policy and Insurance Research. Finally, of course, she is also the director of the ethics program of Point 32 Health. So without further ado, over to you, Anita. Thank you very much.
Thank you. Let me check. Can you hear me? Can you see my slides?
Yes, we can.
Wonderful. So I want to thank Professor Lee, Dr. Ho, the whole entire team, Flora Long, everybody who worked on this, for having me. It's an honor to join you in this session, and I thank you very much for this opportunity to speak about a topic that is dear to my heart, namely pharmaceuticals, and in particularly cancer drugs in the United States, which I think create a role and responsibility for health insurers. And it's wonderful to follow on your excellent layout of the issues, Dr. Zhang, especially the last slide you presented, the balancing act. I think I will build on your balancing act in some of my remarks. So let me see, how can I move those? Here we go. I hope in the next 20 minutes to raise with you, for you, the question of whether more new medicines in a health system approved faster is actually also necessarily better. I want to talk about pricing and spending on those new medicines and the trade-offs that may mean, at least in the US system, for individuals and society. And then I want to highlight the roles and responsibilities of a health insurer in this balancing act between more access to new, potentially life-saving science and also being able to pay for it. So I would like to have you walk away from this with only one take-home message, that it would be this one, that pharmaceuticals in any health system are at the intersection of separate complex systems, and at that intersections, insurers play a key role and have important responsibilities. So let's talk about those intersections. I understand that in ecology, there is something that's called the edge effect. The edge effect in ecology is the space where different ecosystems, say the savanna and the forest, come together. At that space, at the edge of ecosystems, is where life is most interesting. That's where there's more diversity. There's more adaptation to what's happening. I would argue that there's also more challenge, more richness, more need for reflection. And I would argue that pharmaceuticals reside in an edge. So let's think about what that edge might be. Sociologists tell us that societies function because of at least 3 pillars. And so one of those pillars is politics. So that's the rules, regulations, laws that govern a society. The second pillar is money, economics. It puts food on tables, it puts roofs over people's heads. And the third pillar is what makes well-being, flourishing of a society, life relevant. It's science, it's health, it's education, it's culture, it's many more needs that we have for well-being. Pharmaceuticals, in my mind, reside at that intersection of politics, economics, science, and all the other aspects. And that is wonderful. It creates richness for for exploration, and it creates potential dilemmas, balancing dilemmas. And those dilemmas have an ethical aspect. All of them do, I think, and that is where ethical solutions need to be. And that is also where I think insurers can contribute to the inquiry and to be part of the solution. So let me talk about one of the political or politics or rules or regulations of pharmaceuticals in the United States. What you see on this slide is a timeline of Food and Drug Administration. That's the regulatory agency in the United States that makes it possible for drugs to come to the market. So you see Food and Drug regulations over time. And when you look at the left-hand part of the slide, of this timeline, you see that until 1962, pharmaceuticals in the United States were governed by the Food, Drug and Cosmetics Act and some amendments, but the requirement essentially at that time was that drugs that come to the market that the FDA approves have proven safety. With this amendment here in 1962, a requirement was made that drugs not only show to be proven to be safe, they also show to be proven to be effective. That is when the system of phase 1, phase 2, phase 3 trials that are to document evidence, to build evidence in more than one trial, controlled trials, that a drug actually has a clinical benefit. And so now we have, in this time frame here between the 60s and the 80s, a demand on the FDA to show both safety and for the manufacturers to show safety and efficacy, and the FDA to prove, to assess whether that has been sufficiently shown. Now that created a backlog on the part of FDA to have to do this extra work. And by the 80s, the end 80s and the 90s, when the AIDS pandemic and AIDS epidemic in the United States killed thousands of men in the US, there was an uproar against the delay that has been created on the part of the FDA to review new medicines that could potentially meet an unmet need of AIDS patients who were in dire need of life-saving pharmaceuticals. So ensuing the AIDS epidemic in the late 80s, early 90s, a number of regulations that are listed here have been put in place to do two things: to expedite the review on the part of FDA and to facilitate faster development of new medicines. And I want to draw your attention to one key policy implemented in 1992, which is the accelerated approval policy. A similar policy with delay has been put in place by the EMA, the European Medicines Agency, that approves drugs for all the European countries, as well as by the Chinese regulators in 2017. So this idea of approving drugs faster has been essentially become a global idea. So the accelerated approval program, as it's written in the regulations, is intended to allow for earlier approval of drugs that treat serious conditions for which there is an unmet need, meaning we don't have other pharmaceuticals that are equally good or better. And it does allow to show that evidence of benefit based on what's called a surrogate marker, meaning not the intended clinical benefit, namely longer life and better life for a cancer drug, but a so-called surrogate benefit, a surrogate marker, a lab test or an imaging test that is hypothesized, although it doesn't measure the real clinical benefit that the drug is intended to provide. It's hypothesized that it can predict, the surrogate marker can predict that benefit. And then there's a requirement for studies to be conducted by the manufacturer to show that the actual clinical benefit is actually achieved by the drug, and the FDA has the opportunity to remove the licensing, the approval of a drug for an indication for which the benefit has not been proven. Let me say at this point that this has only happened once in the history of the accelerated approval product. So we have more and more drugs approved. Largely, they are cancer drugs, prompted by this history of the approval regulations in the United States, approved based on surrogate markers in faster ways. And that process has created enormously valuable drugs. And this slide here is intended to show you one set of those drugs. These are cancer medicines treating a blood cancer, CML. And what the slide shows is that over time, over this time, when these drugs came on the market, patients who have CML, this chronic myelogenous leukemia, essentially have a life expectancy thanks to those drugs. That's about the life expectancy of somebody without CML, which was not the case when before these drugs came to the market. Patients had a life expectancy of some 2 years or so. So these drugs, these tyrosine kinase inhibitors, have truly changed the expectancy, the duration of life, and the quality of life of patients with CML. However, with the increased uptake of these faster approval regulations, that is not the case for most cancer drugs. Indeed, 2/3 of them come to the market without showing what they are expected to do, namely lengthen life. And most of them come to the market based on so-called surrogate markers, which for cancer drugs are progression-free survival or response rates, meaning how long does it take for the cancer to progress, or what percentage of patients have some sort of shrinkage of their cancers. And when we look at the top left graph here, we see that the correlations between progression-free survival and response rate predicting overall survival are really low. So knowing that a drug increases progression-free survival or response rate does not tell us whether it increases overall survival. It also does not tell us, as this scatter plot here shows, it does not tell us whether it improves somebody's quality of life. So we have a lot of drugs on the market that we do not know whether cancer drugs achieve the intent, lengthening life, improving life. And then there is this requirement of showing in a time frame after they come to the market based on accelerated approval that they actually do achieve the ultimate outcome. That only happens for a fraction of the drugs. And then for those drugs for which the final outcome is shown, it's actually rather limited. It's a lengthening of life of a median of 2.7 months. So I would argue there's a lack of evidence or an evidence of a lack of benefit for many cancer drugs on the market, not for all of them, but for many of them. At the same time, in the United States, and now we get into the other pillar of our ecosystem, at the same time in the United States, because we have no cap on price, the sky is the limit, cancer drug prices have increased dramatically, such that nowadays a month of one cancer medicine costs about $15,000. An annual cost is about $150,000. And you see the gene and cell therapies here cost $500,000 per patient. And of course, those drugs are not given in isolation, they're given in combination. So you can add these costs together, and that makes for very expensive care. Now, the question is, what does this care achieve? What do we spend the money on? And here I show you 2 slides of results from studies that my fellows have done. On the left-hand side, you see the spending on 6 cancer drugs with 10 indications in one of our public insurance systems, Medicare. That's the insurance for the elderly people who are most likely to have cancers. So you see here that these are all indications for which OS benefit has shown to not be achieved in the trials, confirmatory trials of the drugs. And we spent up to some almost $600 million in these 3 years on these drugs. And then some of those indications were withdrawn by the manufacturer, voluntarily withdrawn. And on those, we still spent a substantial amount, some close to $200 million before they were withdrawn. Those that were not withdrawn, we continue to spend on. And one might argue that that is not necessarily a wise spending of money. On the right-hand side, I show you another study, and that we conducted amongst members of commercially insured insurances, which are the employer-sponsored insurances. And this illustrates to you that over time, over these years, when we look at how many patients are exposed each year to drugs, cancer drugs with and without documented overall survival benefit, and how much money is spent on cancer drugs over time, with and without overall survival benefit. We see that there's an increase in use of medicines for which we do not know, or we actually have no documentation of overall survival benefit. And the spending is now more than 50% of the $3.5 billion that in this time frame was spent on these 44 drugs that we studied here. So a lot of money spent, not necessarily with documented evidence of benefit. Just this to illustrate that pharmaceutical spending is a component of increasing healthcare spending in the United States, and it has surpassed spending on other services. And very similar to what you showed, Mr. Chung, our inflation rate in this time for, in general, is some 3.4%. I think that's what you mentioned. Healthcare inflation is 4.3%. Pharmaceutical spending inflation is close to 6% in that time frame. So it's more money spent, and so that has consequences. And so now I get further into the economic pillar of my edge slide. And I want to talk about the consequences of these facts for individuals and for society. So on the individual side, a very apt term has been coined that calls the spending by patients on cancer drugs financial toxicity. We know the drugs have toxicity, clinical toxicity. There's financial toxicity because people have to pay, even when they are insured, they have to pay portions of the costs of those drugs out of pocket. That leads to patients having to declare bankruptcy. Cancer patients are 2.5 times more likely to have to do so. When patients experience this financial strain, they need to cope in some way. They need to have less money spent on food or housing. They need to cut their medicines in half. They have stressors. And that in total leads to actually an 80% higher risk comparing cancer patients who do have to declare bankruptcy to patients with the same cancers, same age, same gender, who don't have to declare bankruptcy. Those who have to declare bankruptcy die earlier. So financial toxicity truly kills. This has also implications for society, and my colleagues and I have coined the term financial pollution because we feel that harm that's inflicted by wasteful spending in environmental science, that would be called pollution. So we think pollution is an apt term, financial pollution of wasteful spending, which one might argue some of that spending on drugs without benefit could be. Here I show you healthcare spending increases leading to underinsurance. So in the we have a term of, we have uninsured patients in the United States, and we have underinsured patients. And underinsured patients, our members, individuals, are those who are insured the entire year, but they have to still, because the insurance benefit is shrinking because of increasing healthcare costs, partly driven by increasing pharmaceutical spending, they have to spend up to 10% of, more than 10% of their income on additional healthcare expenditures aside from premiums. And you see that that percentage, the orange line here, of fully insured people in this age range has increased over time. The percentage of underinsured members. So this is one societal consequence. Another societal consequence is that wages are stagnating. So on this yellow line, you see that employers who co-fund employer-based health insurance have increased their spending on premium co-funding. Members, of course, increase their spending on insurance costs and out-of-pocket healthcare spending much more. But something has to give. And the something in this case for this insured employed population is the wages are stagnating, while cost of living, of course, are going up. And this is now a slide from a public sector state budget. In the public sector in the United States, which covers the insurance for poor people, some of the older people, in the public sector, the states have to balance their budgets. They have only two possibilities to manage rising healthcare costs. One is increasing taxes. The other one is to take money out of other budget items. And you see here that healthcare budgets in the state of Massachusetts over this time period has gone up tremendously, the percentage spent on healthcare, and everything else has gone down. And amongst the things that have gone down, I want to alert you to mental health care spending, under which fall our strategies to deal with another huge problem we have in the United States, which is the opioid crisis. So there is a balancing act. There are trade-offs that are happening in the system. So in summary, so far, I hope I have shown you that pharmaceuticals provide tremendous opportunity for benefiting health of people, and they pose challenges, and those challenges come about by the fact that they reside at this edge of societally important pillars. And I summarize here again that this has to do with the fact that the surrogate markers based on which cancer medicines now tend to be approved don't really predict what we want them to predict: outcome, overall survival and quality of life really well. Confirmatory studies come late or are not conducted. The indications for which we know that there isn't an overall survival benefit stay approved and on the market, and prices are high. So two colleagues of mine who are a true expert in this field have said that it's essentially the situation in the US that for the public sector, we have created a mandate to pay high prices for unproven therapies. So who should care? This slide is my adaptation of the socio-ecological model, where I have put the drug regulator on the top, and then all the organizations that are affected: pharmaceutical companies, diagnostic companies, the media in the United States, because we have direct-to-consumer advertising, hospitals who benefit from some of the sales of the medicines, and then the insurers, the public and private payers, the community, the employers I mentioned, patient organizations, and then providers, individual healthcare providers, and the individuals suffering from an illness that requires a medicine. So who should care about this balance of evidence and prices? And my argument would be that really everybody should care about to know how well drugs work and what they cost. And that is where I think the insurer comes in. So Professor Lee, may I ask you for a time check, please? Am I good on time?
You are actually keeping time very well. You started at about 8:40 and now it's 9 o'clock. See, I did check.
Okay, great. Thank you. So, so let me let me just go for 2 minutes. So I have the honor, as Dr. Ho mentioned, to direct the ethics advisory group of a non-for-profit private health insurer insuring about 2.2 million members in the Eastern United States. And quarterly, I host deliberations by a large group of people on challenging questions that the leaders of the insurer bring up for deliberation. And in this case, the chief medical officer and the director of pharmaceutical transformation have asked, what is the role of the health insurer? What is our responsibility with respect to those accelerated approvals of drugs, their high costs and what we are paying, and where we don't know the evidence? And I would argue that there are three domains of responsibilities. Namely, there is the question, and that was raised in this deliberation. The question was, should we? Do we have the right? Should we? Is it ethically defensible for us to say, no, we don't pay for these drugs until we know that they truly achieve the intended outcomes? What does that do? Does that create more harm? Does that create more benefit? Because we are required to steward people's money, and we are required to think about the societal and the individual benefits and harms. What does that do to trustworthiness of us as an organization? And then second question is, do we have a role? Are we ethically demanded to tell the patients, the members, and the providers what we do and do not know about those medicines, so that they are aware of it, because most patients and most providers may not be? And lastly, are we having a role as advocates for the public to say that we ask for more regulation with respect to approvals of medicines. At this point in time, I wanted to ask the whole entire audience through 3 polls what you think about it, but I think in the interest of time, I'll skip that and go to what the almost 100 diverse participants in this deliberation have come up with at the point of deliberation, which was last October. And they concluded, or they suggested, that yes, well, first of all, their main suggestion was, and that was a bit sort of sobering, that a health insurer actually has very limited leverage to intervene in the system. But nevertheless, a health insurer has responsibilities. And those responsibilities are that they really should have risk-sharing contracts and facilitate in whatever they can the move, the direction of patients, providers, to payment for drugs, use of drugs, payment for drugs that have proven benefits rather than those with uncertain and lacking clinical benefits. They concluded that yes, the insurer has a responsibility to educate, to provide the science, and yes, the insurer has a responsibility to advocate more publicly. And the reasons for this suggestion was that the insurer with which I work and that is putting out these questions, by the way, completely unique in having an ethics advisory deliberation of this kind, is intent to show that they are an honest broker in a complex system. And these suggestions would be documentations of that role in the health system, is what the internal and external stakeholders suggested. So with that, I thank you very much for giving me the opportunity to share these thoughts, and I hope some of those were useful, despite the fact that, of course, every health system is different. Thank you.
Thank you so much, Professor Wagner. That was brilliant. So, of course, we are moving from a very complex system to a highly complex system. Of course, that will be the global health system. And we are now very privileged to hear from Dr. Andreas Reis, who will bring in the ethics. So Professor Wagner has very helpfully highlighted where some of the value premises may come in. And of course, here, Dr. Reis will be speaking to us on some very important developments that we will see also applicable within the context of health insurance. And of course, not only at a national level, but more importantly, from the angle of global health. So Dr. Reis, as you have seen, is the co-lead of the Health Ethics Unit and Governance Unit of the Research for Health Development in the Division of the Chief Scientist in the World Health Organization. So with that, we are, well, I think it's worth highlighting, very privileged to hear from Dr. Reis, because it's an incredibly busy period for the World Health Organization, with ongoing challenges arising from the current pandemic. So with this, it's over to you, Dr. Reis. Thank you very much.
Wan Chang Hao, and first I would like to thank the organizers, Professor Lee, Professor Ho, and Flora Leung from the University of Hong Kong for the kind invitation to WHO and me to this very important meeting. And I have a very long history at WHO of collaborating with Professor Ho for more than 10 years. And so when I received the invitation, I did not hesitate. Because also this topic is really close to our heart and the mission of WHO. Yeah. So here's briefly what I'm going to talk about. Actually, there will be quite distinct parts to my presentation. One will focus on universal health coverage and ethical aspects. And the second one will focus on the recent work of WHO on ethics and governance of artificial intelligence. And then finally, I will bring this together and come more specifically to ethics and health insurers who are developing and deploying AI-based technologies. So first of all, I would like to say that WHO has a very long history of advocating for health for all and for ensuring that even vulnerable and marginalized populations have access to healthcare. And this goes all the way back to the Constitution of WHO in 1946 until very recently. Universal health coverage is really one of the top priorities of the organization. I think some of you might know my former boss quite well, Margaret Chan, and she basically stated that UHC is very much linked to ethics and motivated by ethics. She said, "I regard universal health coverage as the single most powerful concept that public health has to offer. It operationalizes the highest ethical principles of public health. It is a powerful social equalizer and the ultimate expression of fairness." This is almost 10 years ago, but still a very important quote. Here you see WHO's global program of work for the last couple of years and until next year. It's a very ambitious program and has basically 3 interconnected priorities. One of them is to provide 1 billion more people with universal health coverage. So one of the 3 top priorities of WHO. And a few years ago, actually, there was a specific WHO expert group dedicated to ethics and equity considerations on the path to UHC. And here you see the publication that came out of that working group, which was very important in spelling out the ethical dilemmas, but also stressing the fair and deliberative processes that are needed and the inclusion and participation of stakeholders and especially patients in reaching universal health coverage. At the same time, there were some sort of unacceptable trade-offs between different options, how policies can be designed, that were clearly spelled out in this document. I highly recommend it. I cannot go into details in this presentation. But just a few key aspects. So I already mentioned that universal health coverage is really an initiative that is focusing on equity. So all the policies should really adopt a pro-equity approach, leaving no one behind. Inclusion of migrants, marginalized and vulnerable populations is really at the heart of UHC. And basically, there are 3 considerations: fair distribution, fair contribution, and cost effectiveness, which are key. Financial risk protection is, of course, an essential feature of UHC. And this is really to avoid catastrophic health expenditures. If we've just heard from Professor Wagner, this is a key concern, especially for very expensive treatments or also services. And of course, the health insurance sector has an essential role to play in moving towards universal health coverage. And this brings me to the quote of our current Director General, Dr. Tedros, who says, "All roads lead to UHC, and this is our top priority at WHO. For me, the key question of universal health coverage is an ethical one. Do we want our fellow citizens to die because they are poor, or millions of families impoverished by catastrophic health expenditures because they lack financial risk protection?" So this really speaks volumes to the importance of health insurance in this endeavor. And I will now switch gears and come to sort of another but very much related topic. And this is the recent WHO guidance on ethics and artificial intelligence for health. Why has WHO been working on AI? So AI is a huge and fast-growing sector that could be worth about 15 trillion in 2030 and has numerous healthcare applications. So it could revolutionize healthcare, research, drug development, diagnosis, and also public health surveillance. So there's a huge promise, but also significant ethical pitfalls that could undermine core human rights protections. And WHO, with having UHC as a long-term goal, I would argue is really the place where we need to bring together this vision of universal health coverage with the new developments in the new technologies such as AI. Here's just some examples. I think you have all read many examples where AI is really starting to make a difference in radiological diagnosis, for example, in sequencing, immunotherapy, detection of tuberculosis, for example, but also recently, and this is also in LMICs, risk of birth asphyxia can be identified by AI-based predictive systems. So after a 2-year process last year, WHO was able to produce and publish a guidance document in this area, which I will just briefly present the main features. So the key ethical challenges we identified was first, when should AI even be used? This has to do a lot with cost effectiveness and trade-offs with traditional methodologies. There's a huge digital divide, as you know, between countries, but also in countries. There are big concerns about data collection and use, and I'll come to that, the context of insurers in a second. Who has the accountability and responsibility for the use of AI, especially when the decision-making could be more and more automated. There are big concerns about bias and discrimination associated with AI, cybersecurity and safety risks, of course, potential impacts on labor and employment, and how this will change the relationship of doctors and patients, challenges with the private sector in AI, and of course a concern also for climate change as AI is using huge amounts of energy. These are the 6 guiding principles that the expert group identified. I will not go through them in detail, but it's very important to stress that these are the first internationally recognized principles for AI in healthcare. There are a number of legal, regulatory, and non-legal measures that stakeholders should take in order to promote the ethical use of AI for health. And the document not only identifies 6 consensus principles, but also came up with 47 recommendations for diverse stakeholders. And here's just a few of these. So the recommendations target different stakeholders. One are designers and programmers, others are governments, but also companies who, as I say, play a very important role, big tech companies, and finally also civil society, who needs to be involved and participate in the design and deployment as much as possible. And finally, the document, which I can highly recommend, also has a more practical appendix with checklists for certain stakeholders. We have checklists for designers, ministries of health, and providers. We don't have any for insurance companies or insurance sector. Maybe that's something we should consider for a future edition. And we're at the moment busy implementing this guidance in various sectors, for example, in aging, or also in tuberculosis, and in collaboration with civil society. Now, coming to the last part of my presentation. So we have heard of the importance of universal health coverage for WHO we have heard about the push for artificial intelligence, but also the ethical framework that is necessary. I want to come to some emerging uses of AI for the insurance sector. So there are, as in other areas, many opportunities and many potential uses. So one has to do with streamlining operational processes. There are immense opportunities for complex predictive data analysis or cost predictions that are helped by AI-based systems. Claims adjudication and fraud detection are very important potential uses. And then some of you might know that there's an increasing use of chatbots for the triage and also for direction to appropriate services of clients. And some have claimed that actually AI-based technologies might lead us from illness management to wellness management through a predictive and proactive modeling approach. And because the results will have a greater accuracy in diagnostics and better treatment planning. So this could really improve treatment outcomes and also lower costs. So at the same time, as there are many opportunities, there are also a number of ethical considerations that health insurers should keep in mind when they develop and deploy AI-based technologies. So one of them is the issue of risk pooling versus individual risk bearing. Traditionally, one of the key features of health insurance is a certain degree of risk pooling. But if in the future, through the triangulation of various data sources and the knowledge of sensitive data, one could create in a way a fully transparent patient, this could lead to ever smaller risk pools. And in the end, even to individual bearing of risks. Now, some would argue that this actually is justified under the principle of actuarial fairness, but I think this raises really some fundamental questions about the insurance system based on solidarity. There has always been, but I think this is all exacerbated by big data and AI. There is a risk of discrimination and exclusion based on certain health data. And there's really, I think, as I said before, a potential risk for universal health insurance and insurance for all. This is why a key concern is the principle of digital agency and self-determination, which in essence means that patients and individuals should retain control over their health data, especially sensitive data. Some have also said that there is a potential trade-off between the very important principle of privacy and data-driven innovation. Privacy is, of course, a key concern, but at the same time, data can be an extremely valuable resource for medical innovation and health policy. And so health insurers will have to increasingly take care to develop trustworthy solutions that can at the same time keep their clients' data private, but also allow beneficial data-driven research with their data. Really of key importance for this is the trust and trustworthiness for public health and the insurance sector. And Professor Ho has recently published about this. Without trust, the public health sector, and I would argue the health insurance sector, cannot function. And so it's really essential to maintain and keep this trust of their patients and clients. This is where the WHO principles of transparency, explainability, and intelligibility come in. So it has to be, explainable and understandable what mechanisms are used by the industry to deal with data? What are the processes? What are the data governance structures? And there it will be very important also to have participatory approaches, as I mentioned before, so that the patients and the clients are empowered and feel included in the decision-making about the data and the governance mechanisms. The final point is ethics by design. This is not only a slogan, this is one of the main findings of the WHO expert committee. It's very important that ethics is not an afterthought, but that the development of the software and of AI-based algorithms includes from the start ethical values, so that we are sure to have AI-based tools that respect ethical and human rights norms. This is my final slide. So AI can, in principle, be a game changer in the mid and long term in many areas. AI-based tools for the insurance sector holds great promise, for example, for effective management, personalized interventions, and for saving costs. At the same time, there are many ethical pitfalls. So it's very important for the sector, but also for government, to develop sound ethical and regulatory frameworks in order to, at the same time, benefit from AI-based technologies while ensuring the continued trust of the patients. And with that, I thank you very much.
Thank you so much, Dr. Rice. That was brilliant. Professor Lee, would you like to take the lead on the question, on the Q&A? And I'd also like to invite members of the audience, if you have any questions at all, to feed them into the Q&A box, and we will be happy to relay them to the presenters. Over to you, Professor Lee. Thank you.
Just Emily, that will be enough, and it will be very good. I think I've seen some comments and probably a couple of questions from the same person. So I have suggested the first speaker to deal with that entirely at his discretion. And I think Dr. Ho actually raised a good point about something that we can further clarify with Professor Wagner and Dr. Rees for the point that you addressed. And so if there are no new questions come in lieu of questions, I would rather like to invite the second and the third speakers to give takeaways. Thank you.
So Emily, can I come in now?
Yes, please.
Sure. First of all, thank you for the very enthusiastic audience. I know these questions were submitted at 8:30. 3 questions basically focusing on VHIS. I think I can't answer all 3 of them, but I try to put in as much as I could, Emily, because I did rush through some of my slides, so it's a good opportunity for me to recap some of that. First of all, about the claims to premium ratio. I think it's a very good question because insurers are only as good as how they protect. So the VHIS in that sense has been producing good figures. During the presentation, I actually mentioned some figures. The figures that I've got is that out of all the claims, 94% of all claims made through the VHIS products are actually paid. Of course, they are paid to a different kind of ratio, but overall, the ratio are high. In fact, about 36% are 100% paid, and about 79% are 80% or above paid. So I think that is a very good illustration that VHIS does provide protection for the money that you put in. Now, I wish to perhaps also add on to that is that it's able to do it simply because, first of all, the product is very, very heavily regulated. And the product features are very clearly defined. So people do have understanding about what they are buying, and they know what they are eligible for. So in that sense, the friction is a lot less. Now, of course, that is something which we believe can replicate and expand. And for that, I believe that we have some more role to cover. So in fact, we are discussing with the Food and Health Bureau about what we can actually do to make VHIS more potent. Of course, that is a policy question, but I think the ultimate objective, like the questioner has already alluded to, is to make sure that we actually assist in bringing patients from the public to the private sector. Now, as I also alluded in my presentation, we know that the public sector is a default for two kinds of people. The first kind, the poor and the underprivileged, is always the safety net. The second kind are people with serious chronic illnesses that require substantial amount of payment. Those are unlikely to be entirely covered by insurance and not for the total episode. So those are people that we would like to public sector to try to cover. Now, and come to the other question about why we're allowing insurance plans, which are de facto income protection schemes, to continue to service the market. The simple question, I think, lies in the bicycle that I've just I've described. First, there is a demand for these products. There are people, for various reasons, when they fall sick, they can't work. And as some of you will know, that there are a lot of wage earners in Hong Kong whose income is not very stable. So there are certain kind of people who want to pay a modest sum, but at the same time to get their income protected while they are out of work. But the important thing, Professor Lee, is that we have to make sure that people know that this is no replacement for indemnity insurance. So therefore, I would dare to say that we should not let people buy into our insurance product so as to get the cash to subsidize their daily necessities, rather than buying and mistakenly believe that they have bought an insurance where they can insure themselves for a huge medical bill. Now, that links back to the issue about literacy, links back to the issue about education. If people do not know what risks they face, they do not know what actually they need to prepare for. And if they know the risk, they need to know which product will actually adequately cover that risk in the most affordable way. And this is how I believe that the two can work together. We work by producing product innovation that actually people like and they can benefit from. At the same time, people will have to know how they choose and how much to obtain.
Thank you so much, Mr. Cheong. That was really helpful. I just wanted to pick up on that point on that you've mentioned about policyholder empowerment. So you did say that VHIS is very well regulated. So we do have some other individuals, other participants asking. So in terms of more novel interventions, someone in the audience asked about gene therapy, for example. So up and coming sort of interventions. And then, of course, also as Dr. Rice mentioned, the use of AI. So is there any obligation to inform policyholders of these sort of applications? So may I invite Professor Wagner and Dr. Rice to speak to these points. To Professor Wagner first.
Yeah, so I think I want to make a more general point, if I may, and I realize that we are running out of time, and I leave the specific question regarding, of course, empowerment and AI up to Dr. Rice. I think the presentations have brought about, and I think some of you, and in fact, Professor Lee at the outset, you mentioned an enormous need for solidarity. So we live at a time of increasing inequities across the world, and different people have very different access to resources, be they money, be they pharmaceuticals, be they AI-based solutions to problems, as everybody has so eloquently put together. And so my sense is that we have a lot of work to do, particularly in this COVID. I don't want to say post-COVID because I don't think we're there, conflict polarized world, we have a lot of work to do to prove ourselves trustworthy. And that falls on everybody in the system. That falls on the biggest player like WHO just as much as an individual provider. And so I think in everything we do, we need to have honest conversations, honest communication of reliably of what we know and what we don't know about whatever the solutions are that are being proposed as science marches along. With the genome sequencing, the AI technologies, the different products of insurances. So my takeaway is sort of in this bigger picture that there's a lot of opportunity. There's also a lot of responsibility, and it falls on everybody. And sort of the policy holder, I think, if that is what you were referring to, Calvin, I think sometimes I, as an individual person, have the least knowledge of many of the things that are happening behind the scenes, and so I think there is communication is a key piece. That trustworthy communication is a role that falls on everyone. So I hope I haven't skirted your question, but I leave the detailed answer to Dr. Rice on the AI and empowerment.
Thank you so much, Professor Wagner. I couldn't have said it better. So over to you, Andreas.
Yeah, thanks. I think my take home really is that we are, in an area of, AI-based drug development, and with the potential of tailor-made and personalized medicine. So I think what Professor Wagner outlined is actually just the beginning. And this really requires quite difficult trade-offs on the part of the health insurance system and of all of us. How far will solidarity go? There will be a continued need for discussion in this area, and an increasing need. And I think really, Professor Wagner already said it well. What COVID has demonstrated is that really the public needs to be properly involved in the communications. The decisions have to be made transparently, and I think this really includes not only government, but also the health insurers, because it's very hard to gain trust, but it's very easy to lose it. So my plea would really be for the inclusion of policyholders, and also very transparent information of how decisions are made and which technologies are applied. For example, AI-based technologies for making these decisions and for the processes.
Thank you so much, Dr. Rice. It was really very helpful. Emily, if I may, there's this interesting question from one of the participants about the effects, I think, of precision medicine. It seems that is where a lot of the jurisdictions are going, and I do wonder what the implications are. So I wonder if our speakers would like to comment on that, or do you think it's still early days and we couldn't really quite grapple with the issues very clearly as yet?
Calvin, if I may, so I see the question about precision medicine. May I try to respond and offer some reflection?
Thank you.
So thank you very much for this question. And I intended to so the medicines I was talking about are actually going beyond traditional chemotherapy, which was sort of, similar drugs for most people because of the mechanism by which they work. So these are increasingly targeted medicines, precise medicines. And of course, gene therapies, cell therapies are sort of at the pinnacle of those. And I think the sort of N of 1 targeted medicines will come into that space. I do think that whoever put the comment and suggested that there may be a potential for such therapies widening inequities. I think that's a very astute observation, and I think the same holds true that I suggested earlier, namely that we don't know the longevity of those one-time drugs that are supposed to then have long-lasting effects, because these are very new drugs, and we just oftentimes do not know whether they have the expected long-lasting effects. However, they are priced as if they had. And so I think there's a dilemma. If one pays today for $500,000, or let's take the most recent one, $2.125 million, for a medicine that is some people have questioned, and what that does to health systems when we lack the long-term data, and B, even the short-term data are potentially suggesting that the intended effect isn't necessarily documented. And of course, we have to think about a variety of health systems. So my colleagues and I just published a week ago or so a discussion on what's happening in Brazil when a health system forces the society to pay when the way the system is set up by the constitution to actually allow an enforced payment for those therapies at an enforced price. So that's it creates lots of dilemmas, and I think we need to be honest about them. It's not to say that we shouldn't search for better medicines or for better health supporting technologies. I also want to point out that medical care, at least in the context of the United States, I think medical care has maybe 10% contribution to better health. The rest comes from social determinants of health. So we should think about whether the increasing that both Dr. Chong and I try to illustrate, this increasing spending on high-tech medicine, is that really what creates a better well-being, better capabilities for people in life at a time when the planet is under much more severe stress, crisis in terms of pandemic, environment, conflict. So I know I put out questions. I don't have the answer. I wish I had.
Thank you so much for your insights, and I want to thank you all for your great contribution, as well as wonderful presentations. They are most informative, illuminating, as well as comprehensive. I thought when Dr. Reyes made his final remark, there was a perfect ending until Kelvin asked that question, and then the question started to blossom, and the discussion started to branch out again. And I know that Dr. Reyes is busy saving the world, and so I will just have to let you go. And I know Professor Wagner is busy and has to go as well. And I want to thank Clement. Thank you so much for being so forthright and honest in tackling all the issues and questions that were directed at the IA and in the context of Hong Kong. It has never been an easy job, and thank you for doing that. That shall conclude today's webinar. Thank you all again, and we'll see you soon. Thank you.
Thank you so much, everyone. Thank you.